Good afternoon and welcome to the end of week market review for September 13th, 2013. You are going to see that the US markets are now rising bullish, while the Canadian markets are unfortunately declining bullish. There's going to be a few things that we're going to be looking at today. First and foremost, we're going to be taking a look at the market news. We just want to see how the markets are doing and what's been influencing those markets. This will include some economic reports. Most specifically, we're going to be looking at our jobless claims. We're then going to go ahead and do some technical analysis. While here, we'll be looking at the S&P 500 and the Toronto Stock Exchange. We'll be looking at both daily and weekly charts, short-term and long-term. And then we'll finally finish things up by taking a look at the volatility indicator. With this, we'll be able to figure out just how much volatility is in the current marketplace. All right, so first and foremost, we can see that there's been a lot of back and forth trading this week. Though the beginning of the week definitely started up quite strong and managed to continue its gains till at least Wednesday. The overall results were a Dow Jones, which is up 3.04%, and the S&P 500, which is up 1.98%. This was with some easing concerns coming out of Syria and some other good positive economic reports from the US. With the rise of the markets, we did end up seeing quite a few of our commodities decline. We can see that oil is down 2.65% from last week, putting it to $107.31 per barrel. We've got silver down 7.30% from last week. This puts it to $22.08 per ounce. Gold is down 2.05% from last week, putting it to $1,360.10 per ounce. And then finally, your US Canadian pair is down 0.68% from last week. This puts it to 1.0423 pips. So all in all, the markets had a great little run, while the commodities have definitely been taking a hit. Moving into the economic reports, right now we're looking at a initial job loss claim, which was scheduled for September 12th. We could see that they were expecting 327 and actually even upwards of 330,000. Instead, we ended up with 292. So we ended up with quite a decrease in claims, and that did definitely help the markets push themselves up and beyond some resistance into bullish territory. Now, obviously, the markets did end up having a couple of down days near the end of the week, but having this definitely helped keep it above its support levels. So with that said, here we have our S&P 500. We're looking at the daily chart, which means each of these candles represents one day. You're going to see that the lull that we had was on Thursday, with Friday's trading relatively low. All in all, though, we've got that rising MACD, black line over top of the blue line, and we've even got the blue line crossed into bullish territory. Looking at the S&P 500 on the weekly chart, you are going to see that we've got a little bit of room before we're going to hit some overhead resistance, which is around 1710. If we go beyond that resistance level, we are going to be in some uncharted territories where the S&P 500 has not been. And this is very true when you look back all the way to 2004. You can see that the S&P 500 has never been this high. And it's very safe to say that prior to 2004, it wasn't really that high at all, because you can see that it was in the 1150 range. So I'll be very curious to see when the last time the S&P 500 actually was this high. Looking at the TSX, you're going to see that it's looking for some support around the 22 EMA. This happens to be around 12,720. Now, the declines that we've had over the last couple of days were enough to push the MACD into a declining bullish state, and unfortunately we have that black line down below the blue line. Now, looking at the weekly chart, you can see that we had a pretty good run nonetheless over the last couple of months. This pullback might pull down to the 26 EMA. That might end up following the TSX or the S&P 500 and just continuing to work itself up higher and higher. We really don't know at this point in the game, so we are going to have a little bit more caution towards the TSX. And finally, just looking at the TSX, really zoom back to 2004, you're going to see that we've had a great run, but we are definitely nowhere near as positive as we were with the S&P 500. So we'll continue to monitor both of these exchanges and make sure that we're identifying long-term support and resistance so that we can execute the best entry and exit prices. So the last thing that we're looking at here is the volatility indicator. You're going to see that it is currently down 10.66% from last week's close. This puts it to 1416. We know that typically it ranges between 12 and 14, so it's just a smidge on the high side. We don't need to be concerned with this at all, though. It's below actually all three of its resistance levels, the 200 EMA, the 22 EMA, and the 50 EMA. So right now we have no concern with the volatility. If it starts to creep up above those resistance levels, then we'll start to question what's going on. But really, we're not going to show any concern until it gets into the 20s, with some absolute concern if we get into the 30s. So with that said, if you have any further questions, make sure that you either send us an email or phone call. Both our email address and phone number are listed on the screen here. This has been the end of week market review for September 13th, 2013. Ciao for now.